So, a very good morning. Hope everyone is well and had a great weekend. Just going to go through the morning briefing. Pierce is running a bit late, so I'm going to step in and talk you through what we've seen at the weekend and a couple of interesting articles I've read at the weekend as well that are worth contemplating from a macro perspective. First of all, though, just going through at present, just starting to see the DAX at session lows who've just dipped into negative territory here, so just consolidating on the break of the pivot at 97.72. Again, in summary, in terms of the overnight Asian session, things were generally on a more positive note. We saw the Nikkei up around 2% in a continued kind of digestion of the news on that step that they took on Friday, taking their interest rate into negative territory, minus 0.1%. So their index continued to benefit. That then saw European stock futures a little higher at the morning, at the open, and Eurex and Bunds were also up at record levels. We peaked at 163.78 this morning. However, since we've gone through the cash equity open, the last half an hour or so, stocks have just given back some of those initial gains. So they're slight negative now in the DAX and flat broadly elsewhere. Bunds, though, still up around 23 ticks for the time being. Shanghai in the mainland, the Chinese stock index was lower, so there was a slight sour note from the Asia-Pac session. The manufacturing PMI for January in particular came in below expectations at 49.4. That was the lowest reading that we've seen since August of 2012. In terms of the Chinese manufacturing PMIs, again, they do run two different figures. Essentially the government and then the private figure. The Kaizen manufacturing PMI came in at 48.4. That was a slight beat, but did mark the 11th month of contraction. So generally a negative session for China. So it was a slightly mixed picture, albeit with the Nikkei and ASX, which is the Australian index, trading positive territory. Taking a look thus far as well in terms of data that we've already seen this morning. We have had the Spanish manufacturing PMI, that's come in at 55.4. That was up against previous 53. Just so you're aware, we do have the French number that's coming out in around 8 minutes time, then the German number at 5 to 9. These are market moving data points, so if we're still in the briefing, I'll see if I can cover those live. If not, try and wrap this up as quickly as possible. Elsewhere as well, in terms of current price movement, we are seeing the dollar just paring back slightly. The DXY's down around 0.1% this morning. Consequently, just helping support major pairs, euro dollar and cable just been moving higher since European traders have come into their desks. Cable seeing a little bit better of the price action on the upside, having just consolidated above the pivot level. Again, with the UK as well, this is irrespective of the latest YouGov poll. I'll just bring that into your screen that we've seen over the weekend. So much like in the general election, polls will normally start to increase in terms of how regular they come out as we get closer in toward when a potential referendum will be. At the weekend, though, the most interesting from YouGov, and for me is as to be expected really, those leaning more towards potentially leaving the EU in the UK is starting to grow some momentum. You can see on these charts how that started to grow through 2015 and into 2016. So the rise of the Leave camp has grown, a 4-point lead now according to YouGov. Not something that the market's paying too much attention to this morning. As I said, cable's moving higher. I think this is just more of a broader, longer term picture which will gain more traction as we go into the coming months and into the summer. Just on the...
Now just under 1 minute until the Italian manufacturing PMI expect.
So just hearing the squawk saying got the Italian PMI coming out, so I'll keep an eye on that when that comes out. But just another interesting graphic that I saw at the weekend to kind of put into some context this move that Bank of Japan done by taking interest rates into negative territory. This is kind of the growing norm now that we've been seeing. The likes of Denmark, Switzerland, the ECB, their deposit rate have already done the same. And this chart here just showing that we're kind of on the uptrend in terms of that being a policy norm. So nearly a quarter now of all the central banks are adopting that strategy. So there is something which we can look out for in the future. Just looking out for this Italian number now.
Spot 2, so that's 53.2 below expected, 54.8 for the Italian manufacturing PMI.
That number then just a little bit softer on the Italian print. We've got the French and German coming up in a short while. They'll be key ones to potentially dictate some of the price movement for later on this morning. Just on this theme though of interest rates at central banks, one other quite interesting one is the Fed. Obviously the current projections of the Federal Reserve is for them to conduct 4 interest rate hikes for 2016. That is growing or continuing to grow into an unlikely scenario given the surprising events and the downside and volatility we've seen since the beginning of the year. I did a snap poll on the Amplify Twitter account at the weekend, and this is what you guys thought from 23 votes, and how many times you think the Fed will raise interest rates in 2016. I think this pretty much encapsulates what the consensus is now also in the marketplace, and that potentially we might only see one more rate increase from the Fed. You know, there's still a fairly substantial amount thinking maybe not at all in terms of seeing just one and done. Again, there has been some press articles last week suggesting a policy mistake by the Fed and maybe they have to reverse what they've already done. So again, the changing landscape of these central banks, something to just be aware of. It does continue. So just going back to the charts in terms of this morning, I just want to grab the oil chart and have a look at that in a bit more detail, because we've already seen quite a few headlines coming out OPEC related thus far. Just going to put this onto a minute chart. So in terms of this morning, we are negative around 66 cents. We are sub at the moment, albeit just slightly as 33 handle, but you can see this spike that we saw here around 8:14 this morning. That was after Reuters ran a headline talking about Saudi Arabia will cooperate on an output decision but didn't propose any production cuts. So this was a story that was picked up in Al Arabiya TV, which is a news station, a Saudi-owned news station. So last week, if you remember, it was the Russians that quoted Saudi as saying they were looking for a potential 5% global cut from producers, and that caused that big surge in oil prices last week. What we've seen then over the weekend is that Saudi Arabia, they want to cooperate with other oil producers to support the oil market, but importantly, the source said that the kingdom was not the source of a proposal cut to cut production that Russia was studying. So initially we're a little lower overnight. Reuters ran that story, but initially they only snapped that Saudi Arabia will cooperate on oil output, which spiked higher. Then it kind of came clear that this was an old story that was just getting picked up by some of the major news wires, and then we reversed that move. Again, this is really important on a Monday morning. Often, if there's a Middle Eastern newspaper that's run a story, what the guys at Reuters' job will be is when they come into their work at 6 a.m. in the morning, they'll be scouring through all of the Middle Eastern press, looking for breaking news. Only when they've got it, they'll then run it. So irrespective of whether it's old or not, as I've explained before with sort of the impact of news, the fact that it's old doesn't really matter in terms of it actually moving the market this morning. That's because no one's actually seen it yet. But when you've got tens of thousands of terminal users of Reuters and Bloomberg and they run the headline, then it becomes more public knowledge for traders to action, and hence we had that spike. But then you can see quite quickly in around 4 minutes we paired that entire move. One other quite interesting comment I've also heard this morning is about Iran. A couple of comments and various sources just talking about the fact that it could be 2 months away before knowing any production cut rates, or the rate of which they might return, production. That's Iran after the sanctions have been dropped. Again, that's, if anything, could be slightly more bullish on prices, given the fact that we've been expecting them to return to market in an immediate fashion. The fact that it might take a few months, although that is broadly to be expected, may well be interpreted as a slightly more bullish scenario. I'm just going to turn the squawk back on, just waiting the French PMI.
50. So it's 50 in line with expectations for the French manufacturing PMI.
Just heard it come in, it's in line with expectations, but just be looking out for the German numbers shortly. Otherwise, one other quite interesting picture that I saw from the weekend was this one. See if I can make it a bit bigger. So this is looking at the average monthly changes in WTI crude over the last 15 years. And what I just want you to focus on here is February. Although we obviously go from different setups in terms of a broader scenario and what the news is at any particular time, but February tends to be a good month for oil prices. We've gained an average of just over 5.25% in February since the year 2000, and we've been at an up month for oil in 12 of the past 15 Februaries. So again, any of you who like your stats, it's quite an interesting one. It's the most bullish month of them all. And keeping in mind, or in context as well, we are coming off these hugely depressed levels in overall. Otherwise then, just a quick look at the calendar for today, just to wrap things up. As mentioned, these PMIs, they're the main data points for this morning. Looking out for that German number shortly, so if you are in any Bund DAX Euro trades, just be careful on the volatility. Later, we get the UK mortgage approvals and their money supply numbers. These are broadly more second-tier data points. They don't really have too much of an impact in terms of cable prices. Potentially, mortgage approvals will gain a couple of newspaper headlines, because that's what the general public are very much interested in at the moment. Otherwise, US, there are some good pieces coming out later this afternoon. We have most notably ISM manufacturing at 3 p.m. That's really your headline figure. But before then, we'll get the manufacturing PMI and the PCE data. Personal income and spending will also be closely watched. And in terms of speakers, ECB's Coer, a leaning dove, will be speaking at 9:15, so around 20 minutes. ECB's Draghi speaking in European Parliament at 4 p.m. Again, when these ECB members generally speak in Parliament, they tend not to really break any new ground in terms of policy commentary. However, given his importance as a speaker, we'll be keeping a close eye on that as well. A couple of other things just in general for this week. Obviously, first week of the month, we'll get non-farm payrolls on Friday. We've got Super Thursday for the Bank of England, where we'll get the interest rate announcement, minutes, and their quarterly inflation reports. So it's big things to come this week. Okay, guys, so we've got the German number coming up. I'm going to jump off the mic now, let you guys get on, but have yourself a great day, and we'll be on the mic throughout the session. Okay, good luck.